Welcome to Girls in Finance, the podcast where we share insights from experienced professionals to empower the next generation of women in the financial industry and promote financial literacy. Today we have a very special guest, Julie. To start us off, would you mind introducing yourself?
Yeah, my name is Julie Muhn. I work as a research analyst in financial technology for a conference company called Finovate. And I write the Finovate blog and help contribute to some reports and also help manage some social streams like LinkedIn and facilitate webinars. I also help with on-stage content, for example, leading panel conversations with industry experts and kind of just know a lot about the financial technology industry.
Thank you. I guess going off of you working in Finovate, could you expand what makes Finovate unique compared to other conferences?
Yeah, definitely. So Finovate has been around since 2007, and the founders started the company actually as a research reports company. They kind of saw how the financial landscape was, or the financial conference landscape was at the time, and they thought, we can do this better. The scene was changing at the time with a lot of new technology players starting to join and wanting to pitch their new technologies to banks so that banks could enhance their own customer experiences. And the thing about technology, it's kind of hard to understand when someone's just describing it to you. So they thought, let's make it a demo conference. So that's what we do. There's a demo only piece of the conference where each fintech company has 7 minutes to go up on stage and demo their new technology. So they show it on their computer. There's they show, hey, here's what it works like if your bank, here's what it would look like if your bank were to use our technology. They have 7 minutes. If they don't finish in 7 minutes, their mic is cut, there's a gong, and they're kind of ushered off stage. There are no slides allowed, no PowerPoint or canned video. Everything has to be live and available to use for banks. And so afterwards, there's a networking session where banks have the opportunity to go up to these vendors or fintechs and talk to them more about their technology, see if maybe there's a partnership fit there. We also do, the traditional keynote presentations as well as panel conversations just to kind of dig deeper into different topics in the current banking and financial technology landscape as well.
I would just like to go back a little bit. I was wondering, for our audience who might not necessarily really know what fintech is, could you expand on what the industry really is?
Yeah, so fintech is interesting. So obviously, the word is a combination between finance and technology. And for you guys, your generation, it's probably things that you've been used to always. It's things like credit cards or digital onboarding. So being able to sign up for a bank account just on your computer instead of walking into a bank branch, or peer-to-peer payment technologies like Venmo or Zelle. So you guys probably don't even know that it's fintech because that's just banking to you. That's what banking is, but really that's what fintech is. When I started in 2011, a lot of the conversation around fintech, the big thing then was apps. So banks were being able to take what was available on their website and put it in an app format on the phone, which at the time, it was so big, it was so huge that you could, check your balance on your phone or be able to make trades on the stock market from your phone. And that was huge. And right now, obviously, it's changing so much with new technologies, with AI, with things like the blockchain that has really enabled some really cool technological advances. So it all kind of started there. The different players in the industry. So obviously it is comprised of traditional banks and finance companies like, you think JP Morgan Chase, Bank of America, as well as your local credit union, community financial institution, your insurance company. Maybe your parents have a wealth management firm that they work with to help manage their retirement and things like that. So those are the traditional players. And then there's also the fintech side of things. So you guys might be familiar with PayPal. I know I mentioned Venmo, maybe some buy now, pay later technologies like Klarna or Afterpay. Those are all considered fintechs. And then, of course, banking is so broad. It is comprised of what we call retail customers. So us as individuals wanting to have a checking account or a savings account, a credit card. But it also is comprised of businesses and companies. So if a small business needs a bank account, that's a commercial account. So that's a whole different side of things. So with that brings along different needs for new security implications, identification, authentication, new ways to facilitate payments, mortgage lending, loan underwriting, which is just a fancy way of saying, determining the risk of a borrower to determine if they're going to pay the loan back or not, investing, wealth management, things like that. And then there's kind of a hybrid as well. So the banks, the fintechs, and then the third tier here, who are actually fintechs, but they kind of pose as banks. So a lot of end users and consumers think that they might be a bank. So if you've heard of a company like SoFi or Chime, Greenlight, or Dave, those are companies that, for all intents and purposes, they really are like banks. You can get a checking account, a savings account, a credit card. You could take out a loan. Some of them even offer insurance. But they're really just a fintech company that offers banking services, and they're actually backed by a bank. So if you scroll down on the bottom of their website and you read on the bottom, it'll say it's backed by XYZ financial institution. And so it's kind of an interesting scene, and it does get confusing to figure out who is playing what role. But those are kind of the basic roles there.
Thank you for that. Since Julie, you have been a journalist at Finovate for so many years, would you mind sharing any experiences that stood out to you in the fintech industry?
Yeah. So over the past 13 years that I've been in this space, there's been a lot of, drama that goes on with mergers and acquisitions and different funding rounds and, merger acquisitions that fall through, things like that. But I think overall, over this time, what has really struck out to me and just what continues to make itself known is just how antiquated the systems are that so many banks are running on. So a lot of banks' core systems, they're running on an operating system called COBOL, which stands for Common Business Oriented Language. And COBOL started in 1959, and it started to become popular in, I think, the late 1960s or so. But banks are still running on that old technology. And a lot of there are a few problems with this. First of all, a lot of the programmers that are fluent or proficient in COBOL, they're reaching retirement age. And so not a lot of people know that coding language, even though it is what is supporting a lot of large financial institutions at this point. COBOL can also be really vulnerable to cyber attacks, and it can be kind of pretty costly and complex to integrate it with modern systems. So if a bank wants to take a modern lending system, for example, and put it on top, build it into its website, that might be pretty difficult if that new fancy lending system that they want to use doesn't run very well on COBOL. So it can be pretty tough to integrate those two.
I'm just wondering, why is it not easy for financial institutions or banks to move away from COBOL and adapt these new technologies from fintechs?
Yeah, it's a hard question to answer, but banks they're very slow moving because they're large. A lot of banks are large, but even the ones that aren't large, it's still difficult for them to get a new process in place because they have to get all the new approvals. They have to get regulatory approvals. And banks, they're always dealing with consumer data too. And so how they handle that consumer data, where it sits, where it goes, who has access to it, can be very contentious as well. Banks are also under huge regulatory pressures. They can't just be really flippant about adopting new technologies or changing their current technologies because they're subject to a wide variety of regulation. And if they mess that up, it can be very, very costly for them and also really damage their reputation if it gets out into the public sphere. Having their name associated with a compliance order, it just looks bad. And that creates a loss of consumer trust, which ultimately banks run on consumer trust. It's the lifeblood of banks.
I guess moving on from this conversation that we are having, I'm sure that you've encountered companies that are involved in crypto, blockchain, and etc. Would you mind specifying those terms more profoundly for our audience?
Yeah, I'm glad you asked this question because this, I feel for your generation, it'll certainly look different, but it it will be very relevant because right now it's at fairly early stage, which is why a lot of people don't know much about the blockchain or cryptocurrency. You know, they hear Bitcoin, it just sounds a little scary and confusing. So I'll try to break down a handful of terms here. So let's start with the blockchain, because that is what a lot of these technologies are built on. So you can think of the blockchain like a digital notebook that keeps a record of all the transactions, or, you know, every time money moves hands. So in that notebook, every page is a different, you know, contains the list of the transactions. And once that page is full, it's added to a chain of previous pages. And this notebook is shared, quote unquote notebook, is shared among computers around the world. And so everyone has that exact same record. And because everyone sees the same record, it makes it really hard to be able to change that record. So once the transaction is there, it can't be changed. It's also anonymous, meaning, you know, if I make a transaction, you don't know it's Julie Muhn. You just see a string of numbers. And so people don't have to disclose their real name, which can be good and bad, obviously, when you're talking about moving money, because people could be trying to move money for nefarious purposes. So that could be bad. So moving on to cryptocurrency. So cryptocurrencies run on different blockchains, and you can think of cryptocurrencies like digital money as a very basic way to think about digital money. So just like you can use dollars to buy something, you know, you'd swipe your credit card, that's using dollars in your bank account to buy something, even though it's not a dollar bill. You can use a cryptocurrency like Bitcoin or Ethereum. The only difference between, or well, there are a handful of differences, but the main difference between crypto and dollars, or what we call fiat currencies, is that cryptocurrencies, they only exist online. They're not backed by any type of dollar bill or fiat currency, government-controlled currency. They're not controlled by a bank either. That's another big thing about fiat currency, is that most currency has to go through a bank in order to be transferred, whether it's a physical dollar bill, whether it's money going from an ACH transfer from bank to bank, or from bank to, you know, the website that you're buying a shirt from. So that's cryptocurrency. The last I'll go through is decentralized finance, or what we call DeFi. So this is what cryptocurrency falls underneath. Cryptocurrency is DeFi. It's a way to use financial services without having to rely on traditional banks. So instead of relying on traditional banks, you can think of DeFi it leverages the blockchain to create new banking services like borrowing or lending or trading. So you can think about if you want to lend money to someone, or if you want to take out a loan, normally there's a bank transfer, you know, a bank sitting in between to facilitate that. But with DeFi, it's able to take place without a bank. And that's kind of a big deal, because banks obviously take a percentage of that money when those transactions happen, whether it's swiping your credit card and, you know, Visa or MasterCard takes a cut of that, and a bank takes a cut of that. But with decentralized finance, the fees associated with those transactions are very low. And decentralized finance runs on smart contracts, which are essentially like computer programs that automatically execute these transactions when certain conditions are met. So yeah, the opposite of DeFi would be centralized finance, and that's what we have today. So that's when the currency is centrally controlled by a government. And that's kind of a lot. I hope it's not too confusing. Did that make sense?
Yes, definitely. Even I didn't really know too much about blockchain or cryptocurrency, and I learned a lot. Thank you for sharing.
Cool. That's okay.
Yeah, I'm just wondering, do you see like a future for this industry, like wide adoption of it in society? And is the industry continuing to evolve today as we speak?
Yeah. So when you say the industry, are you talking about fintech, or are you talking about DeFi?
DeFi, yeah.
Yeah, it is definitely evolving, and it's really interesting to watch because people are split. Obviously, banks are not big fans of DeFi because they're losing money, you know, they're losing that cut of those transactions. But that said, banks have a lot to gain when they leverage blockchain technologies, because there's a lot of promise there. but banks kind of have a hard time differentiating the blockchain and decentralized finance. So a lot of them just steer clear of cryptocurrency, blockchain, decentralized finance, smart contracts. And a big reason of that is because of regulation. Regulators haven't really gotten here yet. It's unregulated, but if that said, if a bank were to start using these things, and some banks do use smart contracts, but they also use what's called stable coins, which I didn't get to, but that's kind of like a more safe version of a cryptocurrency because it's backed by fiat currency, so traditional bank controlled currency. So some banks are, they're trying to be cutting edge, but in the US, it's very early stage, and regulators, there were a few fallouts last year with some, I don't know if you've heard of FTX, but as a company that had major fraud associated with it. And a lot of consumers lost a lot of money. And obviously, that's why our banking regulators are here. They're here to protect consumers, to make sure no fraud is happening, to make sure consumers aren't losing their money. So when FTX failed, a lot of consumers lost a lot of money, and the regulators looked really bad because they weren't protecting consumers. So now they are on high alert to make sure that they don't look bad, that consumers aren't going to lose more money. And so banks are very hesitant to adopt this new technology. But that said, the players who are currently working in decentralized finance, they are all in. It's like a whole different culture, and it's kind of crazy. There's a lot of money to be made. There's a lot of money to be lost. So with both of those aspects, you always have a lot of different emotions, a lot of different feelings on DeFi. I think personally, it does stand to grow. But that said, if regulation comes into play and just kind of squashes it down, then we're going to see it tank a lot. But it gets kind of political too, because other countries, they're really fueling decentralized finance, and they're even launching their own cryptocurrencies. There are governments that are launching their own cryptocurrencies, what we call CBDCs, central bank distributed currencies. And so the US kind of stands to fall behind if we're not open to these new technologies. So regulators definitely need to be more on top of things in being willing and able to accept these new technologies, to regulate it, to make a safe space for them to innovate and grow, to work with the current banking environment. I could go on and talk about this, but I'll let you get to your next question, because DeFi gets kind of dry.
Oh, don't worry. I feel like continuing off of this conversation, like what trends do you see as the most promising for the future of fintech?
Yeah, in fintech specifically, this could get kind of dry too, but I'll mention a couple of terms. Open banking / open finance, they're kind of similar. People get them confused. And then also banking as a service. Those are both really big right now. So with open finance, it just kind of helps to make the ecosystem of financial services more connected and more accessible using technology. So you as a person, you might have different savings accounts at different banks. You might have your checking account at a different bank. You might have your mortgage loan at a separate financial institution. A lot of cases, I can't remember. I wish I knew the stats on how many average accounts consumers have, but it's a lot. So instead of having to log into each one of these individual websites every day or every week to, check in and see how you're doing, with open finance, you can give your permission to a company to securely share your financial data, your financial information, to create a more seamless experience for you. So a better customer experience there. So as an example, an app can show you all your accounts in one place, and you can, go and you can see your net worth of all your accounts there. You can see how much money you owe on your mortgage, instead of having to go from one to another. So it's kind of like having a universal remote for all your financial stuff, and just making it easier to track and manage your money. Moving over to banking as a service, this one's a little bit more complicated, but it's essentially, if you think about Uber, so Uber is not a financial services company. Uber is, a taxi company or a vehicle or rideshare company. I guess that's what they build themselves as. Yet they offer they offer a credit card to their drivers. They offer a way for end consumers to pay the drivers. So there are banking services integrated into their app. So that is called banking as a service. They're using a separate company that provides those banking services to put into their own app. And it doesn't have to be a non-financial services company. It could be, I used the example before as a bank leveraging a lending technology that's outside of their organization to put on top of their existing operations, just to kind of modernize what they already have. So that is also banking as a service. So instead of building it from scratch in-house, they're able to leverage these third parties and kind of bring them into what they already have. Trying to think of what else I have to say about banking as a service. Yeah, it just helps offer like banking infrastructure. So different money transfer accounts, savings accounts, credit cards, lending to non-banking institutions or even banks that don't want to build it in-house.
Thank you for sharing. You explained all of that really well. Even like I could understand that in simple terms. Thank you. I was just wondering, or just to go back to Finovate really quickly, I wanted to ask like the importance of the event and like how it promotes networking in the industry and how valuable that really is for fintechs.
Yeah, networking it's really important. In fact, networking is, sometimes it's the only reason why people come to events is just to meet people. They don't want to sit through keynote presentations or, maybe they're not interested in learning more. They just want to make those connections. They want to shake hands. They want to sit down and have dinner with people and just build on those connections. I feel like this is so true in a lot of different industries as well, and certainly holds true in banking, where partnerships are kind of the lifeblood of what goes on in banking, because fintechs wouldn't be anywhere without banks, and banks would be pretty far behind if it weren't for fintechs. And even for me as well, personally, I feel like, when you connect with someone on LinkedIn, it's fairly meaningless. You hit a button and you can kind of look at their profile. Doesn't really mean anything. But when you see someone on the networking floor, you can shake their hand and really get to know them. And then also following up. So we do about 3 conferences a year, and then I'll go to other conferences occasionally throughout the year as well. And it's a small enough industry that a lot of these people go to the same conferences. So you'll kind of see them across different conferences. So being able to see people 1 or 2 times a year and catch up on how they're doing, how their kids are doing, and then also what they're seeing in the industry. Because even though my job is to kind of keep my finger on the pulse of news in the industry, what's going on in the industry, I only sit, at one desk, and everybody offers such a unique perspective depending on what subsector they work in. If it's security, payments, lending, things like that, everybody offers a different perspective, and everybody sits at a different level too. They have their own different relationships and perspectives to bring as well. So that can be so valuable to make and also maintain those connections.
Yeah, thank you so much for taking the time to join us on our podcast, Julie. Haley and I truly appreciate your presence and the valuable insights you've just shared and also shared throughout the podcast. And we're truly grateful for the opportunity to have you with us. Thank you.
Yeah, thank you so much. I love what you guys are doing here. And if you or if any of your listeners have any questions for me or want to make connections, feel free to reach out to me on LinkedIn. I'm Julie Muhn on LinkedIn, and hopefully you'll be able to find me, and I might be able to connect you with the right person if you're interested in meeting them. Yeah.